All right, so I don't know if you have noticed this, but I think this is an interesting, amazingly kind of strange phenomenon. But if you ever mention business accounting or your numbers to a small business entrepreneur, a lot of times, I mean, more times than not, it really surprises me. People go, oh God, I don't like that. I don't know how to do that. Y'all, we need to start embracing our numbers and our accounting. My name is Heather, and I help product based businesses grow their e commerce sales channel, sell their products online. So, all right, numbers are something that every single small business owner and entrepreneur needs to pay attention to, but it's the very thing that we kind of put our head in the sand about and don't want to, don't want to learn. We're afraid of terms like P&L and balance sheet and beginning balances and, all of that. We're afraid to learn, what are proper business expenses and what aren't. So, I want to go through today some simple accounting information. This is really like business numbers 101. And this is something that I'm going to continually come back and touch on because it is so important for you to understand your numbers. Numbers are good. They're our friends. If we don't know our cash flow and our expenses, then we're going to not have a business, right? So, first thing, the first order of business is that you need to have separate accounts for your personal life and your business life. Even if you are a person who is just making, like crafts or wreaths or whatever it is, and you get paid, you need to separate that money from your personal to your business. And I don't care if you're forever transferring money from your personal into your business to buy the supplies and all of that. That's fine. But guess what? The IRS does not like it when we commingle our money. That is like a serious no-no. So you do not have to be an LLC. You don't have to do anything like that. You just should have separate accounts. And that includes separate debit cards. So if you're out someplace and you need to get printer paper for your business, then you use your debit card for your business. But if you're out and you want a latte, you need to use your personal expense debit card. Unless you're at a business meeting and you purchase the latte, then you can use your business card. And it's not hard to do. Y'all, I've been doing this for over 15 years and I've always kept my money separate. You cannot mix it together. So please, 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 if you do nothing else out of this video, then please have a personal account and a business account. All right, the second thing, and I was floored to hear that there is someone that I know in the industry, and she built a multi six-figure business, and she did it with spreadsheets in Excel. That just made my hair hurt. So my number 2 tip is invest in a low-cost accounting software. QuickBooks Online has a super inexpensive version. I think it's like $14.95 a month or something like that. Really cheap, y'all. Very inexpensive, and it is very easy to learn. They have a lot of, tutorials on their own, but my God, all you have to do is, Google, QuickBooks Online and YouTube, and you're going to find out everything you need to know. You don't need to pay somebody to help you set it up and everything. It's just really, really simple. So please, the second thing I beg of you, do not use spreadsheets to keep track of your income and expenses. Please invest in QuickBooks because it makes everything a heck of a lot easier. Okay, number 3 tip. Do you know what your reoccurring expenses are? So, for example, the reason we want to know this is, let's say you invest in QuickBooks. That cost for that software is a reoccurring expense. The fees that go with, let's say, Shopify, reoccurring expenses. Any kind of commission that you're going to have to pay someplace, that kind of is reoccurring. You know what's always going to happen. It comes off your top end. So anything, if you actually have an office space, that your rent, reoccurring, your utilities, reoccurring. All of those things are reoccurring expenses. So I want you to, in QuickBooks set up the accounts that have the reoccurring expenses, okay? Or let's say if you're just trying to get your head wrapped around it, write down on a piece of paper. That's fine. I don't care, but just know what your reoccurring expenses are. The reason is you want to know, then you want to make sure you understand, hey, I need to have that much money coming in to cover my reoccurring expenses. So let's say you find out you have $300 a month of recurring expenses, then you need to make sure that you have $300 a month worth of income coming in so that you can cover your cost. The fourth thing I think it is that I want you to do is I want you to really understand what your cost of goods are. So that is the cost of the materials, that's the cost of the packaging, that cost of the the box, all of the things that go into making your product and getting ready for it to go out to the customer. The reason we want to do this is you want to make sure you're charging appropriately. A lot of times we find out that people don't understand what their true cost of goods are, and then they're losing money on each and every single order. So I am going to do a different video that really breaks down, and I'll write it out, and I have a formula that helps you understand how to calculate your true cost of goods. So if you are interested in that, then like this video and comment below, or subscribe to our YouTube channel so you can make sure you don't miss it. All right, so you want to make sure you have a clear understanding of your cost of goods. Also, do you know what a profit margin is? So profit margin is the amount of revenue you are going to make based on the sale. Now, one of the things that people kind of forget about is you still have, that reoccurring expenses. That's your cost of overhead. You need to consider that when you're setting your wholesale and retail prices. So make sure you have an understanding of what percentage that is so that you can include that, because you don't want that to eat into your profit margin. That's just that's a waste if you ask me. All right, then you want to make sure that if you know your cost of goods and you know what you need to have as your profit margin and you know what your overhead is, then it's your way that you can double check that your product is priced correctly, right? So there we go. Last but not least, in your accounting software, I want you to run a P&L once a month. A P&L is a profit and loss statement. It helps you understand what are my expenses, what have been my sales, my income, and if there's a gap, where do I need to make up? It also really helps to set some realistic goals. I'm not saying you want to set a goal like, hey, I want to sell $1 million in 6 months. That's not realistic, y'all. But let's set some realistic goals. Maybe you want to start out with your goal is $500 a month. Then in 3 months, you want to get 1,000 and so forth and so on, so that you build slowly. Maybe your goal is 5,000 a month. Whatever that is, just make sure you have an understanding of a goal and that you have a budget that can, make sure that that's a workable thing for you. So, if you like this video and you want to see a lot more about how you can use your money and smartly and be really aware of your numbers and understand what your true expenses are, your true profit is, including the amount of time you're spending in things, then like this video. And if you are watching this and you are not part of our How to Sell Products Online or not part of our Grow E-Commerce Sales Now membership, then I would love it if you would join the group. Just click the link in the description and we will help you grow your business and make sure it's profitable. All right, y'all. Thanks. Bye.